Good morning, everyone, and welcome to the European crossover webinar. And the big move or story for the day is going to be Chairman Powell's speech. We are seeing a nice little recovery here in the cable, which is a bit surprising. You remember we talked about if we got that daily close below 2774 could really spell puts in an ominous way, and we did get that. Now we're trying to recover, and that will be key if we can hold above 2774. I talked about if we felt that we would probably try and challenge that. Remember on Monday we had the upside all the way up in here in 29, upper 29s, and we felt that anything in between wasn't going to make that much of a difference because we felt that they're going to want to test that downside, and they did, and they got below that 2772 on daily close. You can see that, and that opened the door for them to go lower, but they're holding up fairly well. I mean, we're not seeing it fall through, so it'd be interesting, not say interesting, but it'd be very positive for them after they lose it to recapture it. It may kind of slow things down. So interesting development here in the cable. The euro still holding up here, just below that 113. And gold, we talked about that. Remember, we've been saying that we thought we'd make it down to 1212, and 1212 is where we made it. Made it down there, 1212. We're coming up a little bit here. If we can get past Powell's speech, initially looking for 1216, and then the breakout, which we talked about before, 1219. We talked about the importance of 1219 so many times, going all the way back. We can remember here when then we broke them pretty hard, and then we came back here to test. And I remember that talking about that being a very key area, looking at the volume charts, and sure enough, that stopped right there and went down, and then come back into that 1219 and get beyond there. So it made sense, was it over a week and a half ago when we made it up in here? I thought, okay, we're going to come down to 1219. Came down about 1221, made another high, and then it certainly looked like that's what we ended up holding or going towards 1219, and we did. You can see that we got a nice bounce off the 1219. All the way up to about 1225 and change, and then we came back down. And I said, hey, watch that 1219. We get past that 1219, I think we're going to make it down there to 1212. Sure enough, that's where they went to. It's all about the levels and the touches and volume, essentially. Not that gold's an easy market to call, but a lot of these markets, they just move from level to level. Here in the euro, I was saying be careful if you got past this 113, and be careful not to go in and chase this thing, and actually have it look on the 30-minute. Let's put that onto the 2-hour. Here's that 1313. We came back to key 1313, which is 61%. We saw a nice little bounce here. And we had the good Italian news at the beginning of the week, remember? And we saw that push, but I said, 1372 is key. They closed just a hair above it, but we started to lose it. So opened the door for them to test lower. And I wasn't going to see too much follow through from 113. And we bounced back up. We kind of faded. We still have Powell's speech. We did come down here to this 1267 here. Same thing, just a level here. I wasn't sure we'd make it down here, but we have, and we've seen a little bit of a bounce off of that level. Same thing, just going on the touches on these closes. You see how important these bodies are, and not necessarily the high and the low of a particular bar, but the body close. Let's take a look here. Canadian dollar is still doing very, very well. And as we mentioned, it's pretty tough with crude oil being, we just can't get a bounce out of crude oil. Just nothing. You would expect some kind of a, short covering rally, and we're just not seeing it. Obviously, it's, it's at the, when the glass is half empty, that's, everybody keeps focusing on that. And obviously, and what I'm talking about is now with the G20 thing with Trump and Xi Jinping, that's going to be a concern here is, once you start getting something going, the ball gets rolling or the snowball gets going, pretty hard to stop that momentum. And that's what you've seen here in crude oil. But boy, this is simply nothing short of amazing this fall. And you just can't get very much of a pickup here. And I don't see that you probably will until some type of a resolution. And now it's actually the problem is now that it's probably weighing more and more on the overall global economy, and now it's hard to get a pickup, although you would think this is really overdone here in crude oil. But like I said, with that being so weak, I think dollar CAD could be a lot higher, but it's hard to fight this thing. I mean, I even thought, okay, we may start to slide. We came back down, but look, we've reclaimed here this 54, and here we are pushing in. As long as the dollar stays up here, speaking of, here's the dollar index, and there's that key 97.31, 97.33 is 78%, and we're just hanging above that. And they come back down to touch right in here. And we'll have to see what happens after Powell's speech. But as I said before, is one of the things I'm seeing here with FX is, now you can see the dollar's made these moves, but you just don't get these real good follow-through moves, like, something of let's say 200, 300 pips. I mean, you're just going, you'll break to new highs. And I don't mean the dollar in particular, whether it's, the euro or other markets, you get a move and then generally doesn't stay for a whole length of time. And once we get past Powell's speech today, we maybe start moving right back down again. But watch this 96.70 or right in here 96.50, because then market probably want to pop back up. And like I said, it's been very, very slow. You're not, we're coming back here. We should be launching. But this market certainly isn't giving up its gains in here. This was key here. We talked about on Monday. We talked about this with the holiday trading. We had lost this 96.84, and now we've regained it. And that was key on this 84, and really just about the technicals here. And, you would think, okay, with crude oil still remaining weak, we could push much higher. We're not, and certainly things are going to start to weigh a bit on the dollar, you would think. But right now, there's so many other negatives for other currencies, and with crude oil staying so weak, it just keeps the bid here in the dollar. So that just gives us our overview. Looking at the dollar yen, we did make it, and we talked about that. Remember, we started out the week, the 1309, and we said if we can reclaim this 1309. Well, we got past that 1309 on this solid bar. Here's that 1309 we talked about. It's actually 1308.5. You see that? And got past that and really opened the door for us to go higher. Now, 1340 was above it, and we talked about how important it was a daily close above 1321. We got it, and here's a little bit of resistance level here, but that wasn't what we were focused on. We were focused on 1369, and sure enough, we made it there. And now we're above it. It really has more to do with dollar strength as opposed to where bonds are themselves. And you can see here, bonds are still holding up fairly well, especially with the concerns with equities. But we're going to move into the news. So give me a second. Australian and New Zealand dollars hold their ground. Bonds rally as oil falls. The Australian and New Zealand dollars were holding their ground on Wednesday. Let me see. As the market waited for some clarity to emerge on the Sino-U.S. trade war, soft economic data at home had only a fleeting impact. President Trump is open to reaching a deal over dinner on Saturday with Chinese leader Xi Jinping, but is ready to hike tariffs if there's no breakthrough. The White House economic advisor Larry Kudlow said on Tuesday. I think that's just Kudlow throwing a bone to the markets. Can you imagine? Oh, everything will be okay if I decide over dinner, but if not, I'm ready to throw them on real hard. So we'll see how that plays out. Yet, with the clock ticking, it was unclear whether the two sides agreed on a formal agenda for the leaders' talk with the G20 summit in Buenos Aires. The uncertainty kept the Aussie dollar steady at 72.31. bound between the bids at 71.99 and offers at 72.76. We talked about this, and there's that key 72.40, although our support has been, I think, we had it at 26, but I think we'd even lowered it a little bit. Both were aided by gains on the euro, pound, and yen, as each suffered from troubles of their own. Australian data out on Wednesday disappointed, with construction work falling 2.8% in the third quarter. Westpac economist Andrew Hanlon said the miss would dent economic growth in the quarter, figures for which are due out next week. He's been looking at a quarterly rise of 0.7 in GDP with an annual growth of 3.4. Risks to this number are now clearly to the downside, said Hanlon. Although we are mindful that the jobs growth was robust in the quarter, a labor market performance which suggests the economy continued to move ahead at a solid pace. Over in New Zealand, the country's central bank said it would ease some restrictions on home lending as a positive step for the housing market, but it also warned that banks would need to raise their capital buffers. In the bond market, Australian futures were up to their highest in almost a month, thanks in part to expectations. The recent 30% plunge in oil prices would drag on inflation. Petrol prices have been one of the largest contributors to inflation, climbing almost 21% in the year to September, yet annual inflation had only edged up 1.9% and was still under the RBA's target band of 2 to 3%. The fall in oil prices, if sustained, could thus stop inflation from moving above 2% in coming months and limit the need for a hike in interest rates. Sterling 2-week lows as Brexit warnings eyed. Sterling traded near a 2-week low on Wednesday as investors prepared for warnings from the government and the central bank on how much damage a no-deal Brexit would be to the struggling British economy. Barely 4 months before Britain is due to leave the European Union, Prime Minister Theresa May has failed to get much support from Parliament for the agreement sealed with EU leaders on Sunday. The possibility of a no-deal Brexit sent the pound to 2-week lows on Tuesday. The government's economic impact report is expected during the morning session. Bank of England analysis on Brexit's implications will follow later in the day. The Daily Telegraph said Wednesday's report from the government would show that a scenario resembling May's plans, Britain's economy would be 1 to 2% smaller in 15 years and would be if the country remained in the euro. With no deal, it would be 7.6% smaller. The currency market is trying to figure out one thing, that the long-term outlook to the UK. It matters what numbers that the BOE or government come up with, but I wouldn't expect the scary number to affect sterling too much. Pickering added that the outlook for sterling was likely to become much clearer once Parliament votes on the Brexit deal next month. Prospects of a negotiated exit from the European Union have restored some calm to the currency markets. Implied volatility in the currency, a gauge of expected swings, retreated from a post-Brexit referendum vote peak of 15%. Give me one moment. And dollar nears 2018 high ahead of Powell's speech. The dollar rose on Wednesday before a speech by Federal Reserve Chairman that may provide insights into the central bank's plans for monetary tightening and its recent criticism from President Trump. The dollar's been under pressure in recent weeks on signs the Fed might slow the pace of rate increases and slowing global growth, peak corporate owners, and escalating trade tensions. Scaling back rate increases could weaken the dollar, the world's most liquid currency, which has risen 10% since January. How concerned the Fed sounds about the current economic slowdown will be seen as an indication as how quickly a pause might come, said Tu Lao-Nu, a currency strategist with Commerce Bank. The investors will also focus on whether Fed Chairman Powell, addressing growing hostility from Trump, who said in an interview on Tuesday he's not even a little bit happy with Powell and that the Fed's policies are hurting the economy. Analysts say it's unlikely political interference will alter the Fed's approach. The Fed relishes its independence, and the approach is very mathematical and systematic. Under no circumstance do we expect the U.S. Central Bank to be pressured by Trump, said Stephen Innes. The dollar index, a gauge of its value, versus 6 other major currencies, rose 0.2. The dollar strength also reflected risks around the G20 summit in Buenos Aires, from November 30th to the December 1st. Trump said this week was highly unlikely he would accept China's request to hold off on a planned increase in tariffs. That drove investors to safe haven currencies. Well, a few things here is I think the Fed's already proven their resistance to any type of influence from Trump. So I don't think that that's necessarily going to play out. But after the FOMC, the very next day, as I mentioned, they were already talking about some concerns with the equity markets and things that have gone on. So I think they'll point out those risks. I think what the Fed will probably what they may, in a way of showing some concern without indicating that it's something coming from Trump, is going to be something coming from Trump is going to be they're probably going to mention a little bit more talk about the volatility, which they wouldn't even mention before in equities, but they'll probably lean more to they may mention more on the inflation, because remember, one of the reasons that the Fed has been raising rates is obviously the strong growth, but they've also noted, hey, maybe start to see some inflation come in the pipeline. Well, I think what they can do is they can lean on the unbelievable fall that we've seen in crude oil, and they may go on and stretch and lean on this and say, hey, look, we've fallen so much. We may see some global impact, blah, blah. And that'll be one way of easing back the dial of rate increases without looking as if they're caving into pressures from the administration. That's what I think. We'll see what happens. But once again, they already mentioned it the day after the FOMC, so I don't see why they wouldn't be mentioning it, but they may just focus a little bit more on what's happening in crude oil, and maybe this may ease some pressures on inflation. Hint, hint, we're going to dial back our necessity for rate increases. I think that'll translate, but we shall see. Eurozone bond investors play it safe despite buoyant equities. Core Eurozone bond yields held close to recent lows on Wednesday as investors continued to the safe haven assets despite a broader improvement in risk sentiment. Yeah, that was another thing I didn't mention is, like I said, as they were saying, there, folks still flocking to the dollar because of what is going on with the whole China and U.S. thing. Because, as I said, the crazy thing is that it used to be if you're a country that's trying to generate tariffs, that really worked against your currency. But it has since, over the last 9 or 10 months, it's flipped the other direction. And the reason it's flipped the other direction is what Blake used to refer to as the shirt in the hamper that's the least dirty. Okay, so the thing is that the other economies, global economies, would be impacted, and the U.S. economy would be less impacted if we see all these slowdowns, or that could be caused or generated by tariffs. Generally, the old book was country trying to offer tariffs or generate or push on tariffs, their currency gets whacked. Well, instead, it's kind of flipped the other way, because they think that ultimately the dollar will be less impacted than other current economies if that takes place. So thus, as we move in towards the this whole G20 summit thing, and whether or not they can work out a deal, it's just been where people are just saying, well, I'll just go where it's going to be safer at this point. And so that's how that's played out. We'll see how things go. But anyway, it says Germany's 10-year government bond yield, the benchmark for the region, inched down 0.348%, even as global equity markets turned positive on hopes that Washington and Beijing would broker a trade deal. And I think that they will. Like I said, if you don't do it now, then you really can't realistically think it's going to happen the next month or 2 months. So you probably wouldn't be looking for something till the end of January. And when you look at where equities are, we've already been whacked pretty good. This is actually on the daily. This is not even on a 2 hour. So you can see you don't really need them to break low and make a move down here to probably 24.60 or so. So that would really you take out these lows, it really put things under a big crunch. That's why I think it's in the administration's benefit to go and work something out, and I think that eventually will. But you can see this type of volatility. You surely don't need to come out of that Saturday visit with more bad news. World shares rose to 2-week highs on Wednesday as White House advisor Larry Kudlow held open the possibility of a deal at the weekend, even though he said the U.S. side was disappointed by China's response so far. It's noteworthy how well supported bonds are with the downside correction after rather modest, even when equities are up. Lots of market participants are keen to go into the year-end not too exposed to huge risks, which are coming in multiple directions. Other high-quality Eurozone bond yields edge lower. In Italy, government bond yields proved resilient, rising around 1 basis point in early trade and holding close to 2-month lows reached this week as investors chose to look through the negative turn in Italy's budget standoff with the European Union. European Commissioner Valdis Dombrovskis told German Daily Handelsblatt and Italy's La Stampa that a substantial correction was needed in Italy's draft budget for 2019. Dombrovskis' news underlines how important the terms are in the deficit procedure. EU's government representatives are set on Thursday to back the European Commission disciplinary proceedings against Italy over its expansionary budget. This may continue to weigh a little bit on the euro. It may, because like I said, they have no choice but to go there. It's not like they can just take it easy on Italy. Now, it's all formality as far as procedures, but probably something that'll keep a little bit of the negative going for a bit. Deputy Prime Minister Matteo Salvini said on Tuesday he wanted to avoid the EU disciplinary action over Italy's 2019. Well, who wouldn't? But you know what you can do, which is resolve things. Gold little changes, Fed officials' remarks boost the dollar. Gold prices were tepid on Wednesday, pressured by a robust dollar after senior Federal Reserve official reaffirmed the need for further increases in interest rates, making bullion more expensive for holders of other currencies. Fed Chair Richard Clarida said on Tuesday the central bank should continue to gradually raise interest rates, but it's especially important to monitor economic data as monetary policy was getting close to a neutral stance. The strength of the U.S. dollar has been bad for gold, while the Fed is a little more bullish on interest rates. Prospects of higher U.S. interest rates are negative for the dollar price gold as they raise the opportunity cost of holding the bullion. Investors' attention is now towards Fed Chairman Jerome Powell's speech on Wednesday and the minutes from the Federal Reserve's 7th-8th meeting on Thursday as they wait cues on U.S. rate hikes in 2019. Powell seems likely to reiterate the case for further tightening, which might boost the U.S. dollar further and hurt gold, says Elias Spivak. After holding gold around $12.20 over the past week, gold prices finally capitulated as investors' appetite weakened, ANZ analyst said in a research note. Adding to rising trade tensions, saw investors seeking a safe haven in the dollar and weighing on the precious metals complex. So we shall see. And with that, we'll move on to the bias chart. Okay, this was we talked about that 13.10 on the euro, and would work basically, if we broke past that, we pushed a little bit lower, but I wasn't expecting to see a whole lot past this 113. We did our best to hold here. Now we've taken a dip down to the 1267 level. It's all about, at this point, it's really all, and that was my thinking. I wouldn't want to chase it down there as far as shorts, and we've tried to hold our best here, although we took that dip down to 1267 and kind of holding in the general area here. It's all about Powell's speech. If Powell hints and makes more, I don't think he's going to cave in whatsoever. But I think that if he starts noting, which they've already started to, about concerns, or maybe not concerns, but at least observations of what we've seen here in equities, and also I think they may lean a bit on the fall that you've seen here in crude oil and maybe its impact. That's what I think it gives them a bit of an out there. It's just to, instead of feeling like they caved in, not that they're going to, but I'm saying is that it could be perceived as, caving into pressure from administration. He can just, all he has to do is flip it and turn it to the move they've seen in crude oil. And you can spin that to say, well, we are still, they have seen it, pull back in equity prices, but also one thing that can impact inflation has been this big, big move here in crude oil, and whether or not it's going to be sustained. That will put the market on pause. Has nothing to do with anything that will come from the administration. Right there, big as can be, will be that big move in crude oil, and that would send a signal. Okay, now they're probably going to ease up a bit. I don't think it turns the euro positive in any real sense. But it could allow the euro, if that were to play out, your target would be up in here in 1420. If, like I said, so we see that and it plays out, where would we go? Well, we take a pause at 1372, but ultimately we'd make this move and could push higher depending on how short the market is. But we'll see. We'll see at that point. But that's going to be the main thing here with, I don't think he comes out and starts saying, well, we're ready to keep on raising. It doesn't make a whole lot of sense because of what's going on with crude oil. And I think crude oil is the one thing that gives an out to, say, hey, we're going to have to, we're going to keep an eye on crude and see what's happening because we've had a pretty big move. We'll see where that plays out. That being said, support, well, we see it here at that 1267. Euro's been pretty well beat up. I just don't see where he does that, but technically speaking, that would be support there, 1254. 1254 here. If the market gets spooked a bit. Might be a little bit, here's the thing is if Powell does that, and we see that, I think we could see the euro maybe take a quick run up here towards 1372, okay? But be wary, we might even push right to here, 1394, if that, this plays out. But don't get overly excited because once again, you'll have the G20 with Buenos Aires. And so if the market's going to play into that risk, so you could see this, run all the way back up here, and then turn around and come back down and settle around 1331. So just be aware of that. So on the upside, resistance will be right here at 1350. I think we have to give it that room, just in case we do see that. There'll be a pause here at 1321, but the resistance is going to come here at 1352. But like I said, if we do see the Powell, you'll probably see a run up here to about probably about 1383. This be challenging this high if we see Powell, and you might even push even a little bit higher, as I mentioned, the 1394, maybe to 14, if that plays out. But don't forget, as you get to the G20 thing, you'll see the market pare back as people seek the safety once again. What if? I don't think they're not going to come up with something equitable, but that would open the door for them to revisit and potentially come back down to 1331. But on the short haul, it's going to be 1350 in light of the speech and where we could move. So you have to open up these ranges a bit. Cables held up really well. We even saw that with the risk was 26.94. Remember, I thought they'd even push down there, holding up relatively well. Right there, you see the body touches. That's where it's going to be now at 27.33. Resistance for right now, it's going to be there. But once again, like I said, we have to open up the door. Once again, like we said about Powell. See this body touches right there. I'll play it more conservative here. Go at 28.63. we could push higher, but that'll be your initial resistance, 28.63. Aussie dollar, we moved this from 72.26. Remember, the 72.40 was that area we talked about, but we lowered it 26 from the day before. And I think it held around there or a little bit lower and then popped back up. So we're back up to around that 72.40 again. But the risk, it's going to be right there, 72.02. With resistance, if we get the whole Powell thing plays out, let's give some room, 72.94. So 72.02, 72.94. We may be able to finish a bit early because everything's relatively quiet. And as I mentioned to you, the key is going to be Powell's speech today. I mean, now the cable, that's moving and is in its own world. But for everybody else, for the rest of the majors overall, and really for a lot of other markets, it's doggone it, I typed in the wrong thing. Yeah, I sure did. Doggone it. Let's see if I can. There we go. Heck? Okay. It's going to still stay here, 68.45. Well, I don't think we had it up there, but that's it. Yeah, we still have it, 68.45. Risk, I'm just going to keep it simple, 67.58. Right there. Here's 35. Let's tighten this up a bit. Dollar Swissy. Well, it's all about par 34. I'm not sure if they'll make it all the way back up there. I don't know where Powell's going to be really hawkish, especially what's happened with crude oil. I think that gives them an out there. But that's technically the level, so it's going to be par 34. Par 05 has held up relatively well as resistance, but will allow for those ranges. People won't. Now let's go for support. And we'll go with 99.65. Well, no, I do want to go lower because, like I said, if Powell lets up a bit, so yeah, right there, the 99 on a very short-term basis, 99.37. Oh, that's what we have right here. Dollar yen, well, here remember we talked about that potentially. Remember we were lower, And I said, there's some resistance here at 1340. You can see here, but it's like that's not what it's about. If we get past here, this 1309, 1321 daily, it opens the door. That's the real level up here, 1369, and we've even gone beyond that. And you would think that it may not be as strong in light of where bond prices are. But this thing is just advancing, just not simply on dollar strength. But like I said, I think that we have a reasonable chance that we may see Powell ease a bit. Not that I don't think he's easing back so much on the interest rate hikes, but starting to turn the focus towards maybe concerns and thoughts with inflation. Also, a little bit of an impact on what we've seen here in equity markets. He has the opportunity to go on and say that the concerns with global tariffs, which he has not been for. I'm just saying, so although he did make a case that, which was kind of crazy, is that that could work. And he met, which is pretty interesting. He had noted that tariffs could ultimately work out okay because they could reduce inflation. Well, I think crude oil's having its own impact in that direction. So that may... that in itself may end up addressing that whole issue, spin the whole thing on one side with the thought with what happens with energy prices and its own impact. I mean, they make up a good sized component, but when you see that kind of a huge move, that's going to make a big difference. So I know that the market is going that direction as far as, the concerns with interest rates, but you have to wonder, I mean, I guess and probably for good reason, because Powell's been talking so hawkish, but, where are you going to, it's going to be the old commercial from the 80s. Where's the beef? Where's you going to see the inflation if you see crude oil drop like that? That's saying it's going to have an impact, and you've already seen that also with overall equity prices. You would expect to be a bit of a slowdown here. That being said, we'd be looking at 114. You can see that coming across. I don't think it's going to make it up there. I think we could see a pause, but we shall see here. As far as support, well, what if Powell comes in and kind of flips the script here? Well, there it is right there, 1319 for starters. Actually, no. You know where it would be? That was the breakout. Remember, we talked about that on Monday, 1308 and a half. It was, and then we call it 1309. It's 8 and a half, so we'll just call it 1308. If we see that play out. So you have to factor in different scenarios. That way you don't get caught with your pants down. You can still be in a situation where you think something's going to happen and it doesn't happen. But at least if you have that scenario, you're not, being caught with your pants down. At least you can say, oh, wow, I thought for sure it was going to be this way. Well, I'm dead wrong. But where will the market go to now that I'm dead wrong? Well, at least you have a scenario played out just in case, even though you don't think it may not necessarily be viable, but it was certainly, at least initially, at least you're prepared as to where you think the market would end up going if you're wrong. So let's go on and go into the cash dollar index. And like I said, it's a slow day overall, even though we've seen some price movement, because market's going to be a bit of on pause until we get past Powell's meeting or speech. Once we get past that, then we'll kind of know what's going to happen at that point. So probably be able to finish up relatively early. So let's go move into the cash dollar index. So we had this at night, and here's an interesting thing with the cash dollar index. We had 97.31. That was our resistance. We had some trouble there initially. You can see here. We paused actually before we even did the analysis. Remember, we made this run here. We're already pairing back and reasserted ourselves. We saw a pause here at the 97.33 intraday. I mean, intra-bar, because it's a 2-hour bar. We've seen it reassert itself, come back down to 31, so you can see the importance of these touches, as I told you, right there. And then we popped back up. We kind of moved and dangled around. We talked about the importance of, on a daily, 97.14. Well, lo and behold, look what it did. It closed above 97.14. So technically, it opens the door for them to move higher. So the next resistance would be up here at 97.72. If it were to play that way. I don't think it's going to, like I said, but like I said, you have to have scenarios where where am I wrong? What happens if I'm wrong? But like I said, the one thing that you can kind of, at least I am, as far as looking at a scenario, is this is like ignoring the elephant in the room. I don't know how you ignore a $28 move in crude oil in less than 2 months. And that's not talking my book. I'm just saying and that's one of the things that they've been talking about is, okay, we're starting to see some inflation, blah, blah. Well, you throw this into the pipeline and you tell me what the heck that does with inflation. Now, like I said, it works both ways, because that's why Australian bonds were doing so well, because, okay, the economy, which their workforce, the jobs numbers out of Australia have been very, very good. Same thing with Europe. How are they going to get to this 2%, Draghi's 2%, if oil falls out a bit? That being said, not saying the dollar's going to go to heck in a handbasket. I'm just saying we could see a pullback, because that's what the one thing they've been talking about is the impact of inflation going further if it starts to build up. Well, this will knock that down and gives the Fed, which they're already talking after the FOMC, an area to pause back a bit. Without looking like they're caving into pressure from the administration. But that's what I'm saying. It's hard to ignore this. And that's what I'm thinking. If you're looking for something to focus on, whether it happens or not, I'm saying is I think that if Powell talks about this and focuses some more on not only its impact, probably mentions a little bit globally, but the impact of this. And don't forget, one of the things that I saw a story just as a, ancillary story, because we have a lot of time. We're going to finish early. I saw it was from the Bloomberg reporter, Lisa Abramovich. She was doing I think she did a retweet of a Bloomberg story. I believe it was Bloomberg, but it was talking about the Dallas area, and it said something like, so goes Dallas, so goes the market, or something like that. And what it was talking about, it said, so it's talking about the fall that we've seen, how it could be potentially bad, this huge fall we've seen in crude oil. And it was saying that you've seen this concern is for drillers, and they were saying that now, because we had a lot of people move to Texas, so they were saying, she was saying, or in the story said, we're not seeing these bidding wars for homes that we are. We're seeing a lot more dropping of the prices for these home sales, and we're seeing it take a lot longer to sell a home. So the thought was, and I did see the Dallas Services Index yesterday, and it wasn't a whole lot weaker, but it was definitely weaker. I think the previous month was like 17, and the current month was like 11 or something like that. But certainly this can take a pretty good hit, and if it was in and of itself, it may not get it would have some attention, but it might not garner a whole lot of focus. But when you have this, look at this volatility we had here, and then you have this, then yeah, I think that so I believe the narrative could be is where Jerome Powell starts to turn a little bit more of his attention towards the move we see in crude oil. And he may use that as okay, this may be impacting, also could have an impact on equities, blah, 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 and give you the hint without saying it that the market could take away is that the Fed may start to slow down its increases without him actually saying it. So anyway, enough of that. That's why I think that could play out. So here's the key thing. Obviously, if we see this, we could see 97.14 give way. But if we see the market close below 97.14, then that it doesn't make it bearish. It just takes away this push for that upside. So 97.72 is going to be the resistance. I don't necessarily believe we'd get there, but you got to respect the technicals. I do believe, like I said, you want to keep the 14 there because that's going to be important if we go in and close below that. Support on the downside. Well, we know this is very, very important. 96.84, very important. This is what, remember here, look how important the 96.84 is. And once again, why I tell you important to go with the touches, okay? So we lost this, came back up, we struggled, we got above it. Now we talked about this on Monday. I said, hey, look, you can take this with a grain of salt because it happened over the holiday, is that we lost to 96.84. And I'll be doggone, here on Monday in the new U.S. session, they reclaimed the 96.84. And we were talking about yesterday. I said it was slow. It wasn't like they jumped above. It was just like they were 80, 82, 81, 82, 84, 83, 84. And here it looks like a big jump, but it wasn't. It was gradual, and it reclaimed this 84 and opened the door for them to go higher. So just going to the technicals. So this will be, even though it's not that far away, this will be the reactionary point here. They'll probably overshoot it a bit. So we'll say the support would come in right there, 96.80. And gold, it's right here. That would be, if we were trying to push it lower, would be 1207. I don't, like I said, if Powell were to ease back the dial on that, well, intraday, if you're scalping around, it'd be 16, but it's going to be 19 right there. That would be, but if that were to play out and it looks like the Fed's going to unwind, or not unwind, but take things a little bit easier, your real resistance would really be 24 initially. And actually, we could move even much higher on a bounce back if they said, wow, the Fed's going to ease back a bit now, or dial back its pedal to the metal. So on a push down here, it'd be 1207. But I think this area is going to hold overall. Upside, well, we talked about that 1219. That would be initially speaking, but I think we could make it up to 1224 if that scenario plays out. That's what I'm saying. So you'd see a reaction at 1219, but they'd push them up to 1224 for starters. And if it looks like the Fed has if it does play out that way, and it looks like, wow, the Fed's it's going to ease back a bit, we'll get up to 1237 probably in about a couple of days. Bonds. This is interesting, depending on how this all plays out. We'll just go right here, 40.25, right there. Well, actually, that might be 40.24. Yeah, 24, and on the downside, 39.9. On the bunds, boy, this has held up really well. No wonder that. Yeah, they're right, because of the concerns with the G20 thing and the whole mess. I'm going to go just with the technicals here. 61.29. Actually, 61.30. 60.73. And moving on to the DAX. Well, we had that 11,451. That's up in here, and really no changes here. Market's kind of hanging around. If Powell does that, obviously we'll see a pretty big rally. So we'll keep the 451, and on the downside, no changes here, 11,239. So really, that's going to stay right there. So I think we have our scenarios in place, how we think that this could play out. It's going to be relatively quiet until we get with Powell. So that's why we have a very short day here. Just keep in mind what we think would happen on the euro. Obviously, we've got the concerns with Italy, but it'll be the whole Powell thing that's going to really move this market here. And 1254 be that next area of support. We're struggling here, but like I said, if that plays out, we'll rally them up, but don't get too overly excited when they do, because we still have the G20. You never know how Trump's going to react, so the market will play back into the dollars. But we could see a decent reaction after Powell. That's all I've got here, because like I said, it's going to be a short day until we get through with Powell. But thanks for joining us here on the European crossover, and tomorrow obviously will probably be a longer day. Not short like today. Move this out of the way. And good luck trading. And thanks for joining here on the European crossover.